It is Phil Ratcliffe and Tony Jones joining you from our studio. It has been a while since we did a broadcast. Coronavirus is kind of throwing kinks, I think, in everybody's plans. And so today we are going to give a little bit of the CARE Act update for employers, some of the things that have been passed to try to especially help small businesses keep people paid, if possible, to work, and in the end, hopefully lessen the impact that this pandemic has had on our economy, so that even though it's a human tragedy, hopefully it won't be as bad of an economic tragedy for most people. So,
yeah. Well, we'll have to see what happens, and I think there's even more in the pipeline that we're going to have to talk about. So somewhere we'll be talking more about this, I think. But anyway, it's good to be back here talking. We're doing our good social distancing with a nice plant there.
Here.
But it'll be useful to talk through this because some of our small business clients have been through this. And so why don't we just talk about some of the options that are available coming not only from the CARE Act, but what's available to people right now.
So there's four main things that we're going to talk about for small employers, and a couple of them are available to all employers. But we're going to talk about EIDL, which is the Economic Injury Disaster Loans, which have been around for a long time and just adapted to this pandemic. We're going to talk about the Payroll Protection Program, or you may have heard PPP, and then employee retention credits. So kind of getting tax credits. And then the other one that came out kind of first, what they were talking about, but it's probably the worst, which is a delay in employment taxes, kind of getting a 0% loan from the government on the employer part of taxes. So, we'll kind of start with the EIDL since they're the oldest and have been around for a long time to help people.
Yeah, so this loan, like you said, it's been around for a while, right? And so at any point in time, Congress can just attach a problem to this bill. And so the pandemic has been included in this now. So businesses under the size of 500 people are eligible for the EIDL, Economic Disaster Injury Loan. But anyway, this is funneled through the SBA.
It's directly through the SBA. It's not through private lenders.
Payroll, rent, mortgage interest, utilities, that's what it's meant to cover in general. So you can't refinance or pay off debt with this. That's not what it's about. The max is $2 million.
Yep. So really this loan is very amorphous because if you look at the old applications versus the applications that they're taking now, and let us kind of share our screen with you here, you can kind of see since this does go straight to the SBA, I mean, just Googling the SBA EIDL, or you can just, it's up here. I mean, this is mainly what the SBA is focused on. You can look through here and look at the funding options, and it'll come up with the EIDL or the PPP. When you come down through here, you'll see, here is the link for coronavirus, COVID-19. Here's the link for traditional EIDL. So, if you were in one of the recent tornadoes or what so, you would go with the traditional here. If you're applying for a loan assistance from the pandemic, you would apply here because the applications are very different. But interestingly, the loan, when you come through here for the SBA, it says who's eligible, you're attesting to all of this. It really doesn't ask for very much information. I mean, I would say if it was a paper form, I'm not going to I guess we could. I think it makes you click through everything and attest to it. Once you go to the next page, it's less than 2 pages of information you have to fill out. And then basically attest the thing. So if you are lying, there could be significant penalties if you're trying to defraud on a federal type thing. But from experience of helping small business clients, personal experience kind of going through and trying the process, I have no idea how it's going to work, and I still don't know anybody that's gotten funded because they don't really ask you how much of a loan you're trying to take. They just ask you, how much did you make? What are your expenses? Attest to these things. Do you want the $10,000 up front? And that's one thing we didn't mention. With this, there is if you say that you want it, there's a $10,000 amount that's supposed to be given out in 3 days. Again, there are people that have gotten this, but it was supposed to be guaranteed 3 days, and I don't think they're anywhere near getting even half the people that. So definitely kind of a broken promise and letdown from the government and the SBA on that. And I think what's even worse is people that have applied for this, et cetera, there's no communication. There's no email that says, hey, you submitted it, or hey, we're processing it, or hey, you're this far in, or we're behind, or you can expect this. Nothing. Nothing. You get a confirmation number, and if you call, for example, I tried to call to follow up at the end of last week, and I was number 1,742 in queue on the phone. Like, it's crazy. So, FYI, it's not going according to plan, and they're overwhelmed. So, anyways,
and I just think to them, that, just getting grounded right now, it's going to be a while. But the fact that they're advertising 3 days for $10,000 when a lot of businesses need it is what's unfortunate.
Yeah.
So I'll make a note about these programs too. Make sure you look at them thoroughly before you choose which is the best route, because there's some overlap in these and some are exclusive of each other. So make sure you
and we'll talk about that.
What's best for you.
Yeah. So basically, when you take this type of loan, the interest rate for most businesses is going to be 3.75%, which is really reasonable. If you're a nonprofit, you get a percent knocked off of that. These loans do need to be personally guaranteed. So you are kind of putting yourself on the line. It's not just if your business goes under, then you just are protected by your S Corp or LLC or what so. So they do need to be personally guaranteed. The repayment is 10 to 30 years. I think the default's going to be more at the 10, unless extenuating circumstances. And the $10,000 can be a grant. So even they're supposed to be fronting the $10,000 if you say that you need it. Just kind of taking everybody on their word. If the loan gets approved, then that turns into a grant. If it doesn't, you own the $10,000 back. So FYI, these are a loan. Except for the $10,000, nothing's getting forgiven. You're going to pay it back. It's a good interest rate. If it's harder on you, you can stretch it over a long period of time. If you're a smaller, employee business, but you have high fixed assets and what so, especially if you really experienced a loss or what so, these can be better because you could get a good bit more money from them. Okay.
Yeah. So that is the economic injury disaster law or loans. Mm-hmm. Now coming directly from the CARES Act is the payroll protection program.
Yep.
So this is more through private lenders. It's again similar reasons: payroll, rent, mortgage interest, utilities, and such. But it is different. And again, this goes back to one. We'll go over when you should be picking which one.
Yeah. So this is done by, as Tony mentioned, private lenders, companies that have traditionally done what's called the 7A loans for the SBA. So if you've ever gotten an SBA loan, or you know that your bank or credit union or what so does them, then you can generally go through them. How much you're going to be able to get is 2.5 times your payroll, up to $10 million. So this one sounds higher, but for a lot of small businesses, unless you have a pretty big payroll, a lot of times it would probably be smaller. The real huge positive about this is that if you use more than 75% of it for payroll, then it's supposed to be forgiven. So again, I feel like they've tried to rush this through so fast, et cetera, that there's a lot of promises made that aren't totally following through. So hopefully the forgiveness will be there. But one of the things I've seen out there cautionary is there are a lot of attestations you have to make for this. You need the loan. You've been impacted by the COVID-19. It's not just free money. Defrauding the government on a federal program like this, could be jail time, if not significant fines, more than what you might have been able to get out of it. So make sure that you need it, and you're not out there, thinking this is Oprah show and you get a loan and you get a loan and you get a loan that's going to be forgiven. You should need it, and do everything right. Look at every one of those things and make sure that it applies to you and your business. Otherwise, you could be causing yourself problems. Another thing that I saw when I was attending kind of a CPA web conference looking at this is you need to really cross your T's and dot your I's if you get this money, to really set it aside from all your other operating expenses Don't commingle it with any money you might spend personally or other stuff for your business that you're spending on marketing and advertising and supplies. Like this should be a separate account that just your payroll comes out of, and maybe you write a couple checks for, your rent or lease or what so that, there is no question that you spend this money on what it was supposed to be spent for.
I would quarantine that money and make it exclusive for this.
No pun intended.
So you really want to make it. The other thing we learned was how fast the money is being accounted for.
For sure.
One stat we heard from Bank of America alone was that
was last Friday.
Last Friday, their loans alone had accounted for 7%
of the total.
That was one bank, one day. So
if you haven't gotten your application in and you qualify for this, you need to do it now.
Right. I mean, don't, when this is over, get right to the computer and put it in. Make your decision on what you need, but you need to do it right away.
Yeah. And who should you put your loan into? That's difficult because there are a lot of lenders out there. But from some of the media coverage and information that we've gotten, if you have an existing relationship with a bank where you have corporate either lending accounts or checking, credit, etc., that you already have this relationship and they do that, put it through there, because a lot of these institutions are prioritizing their existing customers first. And so that will help get you more to the head of the line. Plus, they'll probably have to do a little bit less due diligence because they've already kind of got their compliance stuff about you as a legitimate business, etc. Locally, we could screen share again here. We have a pretty close relationship with Kemba. So if you are watching this around Columbus, they do have a nice online program now that you can put in for a PPP loan. And it's just telling you the things that you're going to need because they need to verify your payroll. They want to verify your taxes and your income. So you are going to be giving a lot of information to do this. So another consideration on this, if you're kind of like, yeah, I could probably qualify, but I don't know if I totally need it, but I could absolutely justify it, especially with the uncertainty that this, could turn into a deeper recession or what. So do you want to put all that information out? This could very well turn public in terms of like who got what, etc. And so that's another consideration too. There's another fact sheet. We'll kind of put these with the video as well on the PPP here. This is straight from the Treasury, just a fact sheet answering questions and what's out. But one of the nice things about this program is that for anything that does turn into an actual loan, so say you need to spend more of it than just for payroll or what's out, the interest rate on this is only 1%. Okay. Some people did the EIDL loans really fast and got them approved and said, no, I need to do a PPP loan. If you put in a PPP application, you can roll the EIDL loan into the PPP loan. And the benefits of that would be a lower interest rate. Now, the downside is this loan has to be paid back in 2 years, not 10 to 30. So again, if it is only a short-term thing, great, no big deal. And you can get forgiven what you can get forgiven. There's no personal guarantee. There's no collateralizing assets or anything. This is just straight up. You qualify it, you get it, get forgiven what can be forgiven, and then you pay the rest back over 2 years. That's it. That's how it's supposed to work. When you're looking at how much you can get, 2.5 times payroll. If you do have a business with higher comp people, or you are, or what, so the limit's only $100,000 on salary. So again, they're not trying to give handouts to people making bukus of money to protect their payroll.
Yeah, and I'll just reiterate what you said earlier. I think when politicians are going to come back one day and look for examples of people to make bad behavior. So there's no collateral, no personal guarantee, but you need to dot your I's. You need to make sure that the information you're giving for the loan is spot on.
So great opportunity to help businesses really stay in business. Again, if they actually get through the bureaucracy of funding all these loans. So I've only heard a couple examples of these being funded so far. It is Thursday, April 9th now. So they've been taking applications since last Friday. So it's been a week. They've probably, from the applications that they've taken, gone through the entire $350 billion That's why if you may be seeing the headlines right now, you know, the Republicans are asking for another 250 billion to inject into this program immediately. And of course, the Democrats are on board, but they want a lot more stuff. So hoping that they don't hold it hostage to really help small businesses, because I think this is one of the programs that is really going to help us bounce back from this recession, and probably one that, if not pay for itself, would be really close. Because if we can keep people getting paid and spending in the economy, and then as soon as it's safe, can just pop back up back to work, I mean, that's going to be amazing rather than having a high unemployment for a year or two, and then hiring slowly over the next couple of years. I mean, if we can really get back into things really fast, that's going to be a huge, awesome thing for our economy.
Right. So that means everybody needs a social distance too, because this can't go on forever, right? I mean, if we can't be looking at these come September, October, people are going to need more. But it's a great way to facilitate paying people without having to put people or unemploy them and just keeping them status quo.
Yeah.
So
the next thing we're talking about is the employee retention credit. Now, the first two that we were talking about were limited to employers less than 500. The next two that we're talking about are not. They're eligible employer of any size. So the credit really, this is for businesses that are hard impacted. So to qualify to even be able to use this, you have to have been mandated to shut down. So not working, not being able to run your business, not an essential employee or business, and or you could be an essential business and your revenues took a hit of 50% or more from the same quarter last year. Okay, that is really hard. I mean, you really have to have been hammered during this pandemic to be able to qualify for this.
But most essential businesses aren't hit like that.
No. So, I mean, some of the ones that are essential, they may be surpassing their revenues and from last year. You know, some of the argument is saying, hey, we should do heroes pay or bonuses to some of these places because they're out there risking themselves and the businesses are making more money. You know, so, you know, it is kind of unfair for them to just have higher profit margins when it's actually the employees are the ones taking the risk.
Right.
And so anyways, employee retention credit, it's application from your accountant or tax attorney or is probably not going to be simple, but understanding it's fairly simple if you meet that hurdle to get it. It's basically you're going to get a 50% tax credit up to your employee's wages of $10,000. So it's a $5,000 credit for each employee, you know, if that applies, right? And so the way that you get that is it gets applied towards the FICA taxes, and if it can't cover it, then you get the excess refunded. If you do this, you're not eligible, or if you get a PPP loan, you're not eligible for this. So you can't do both. You cannot double dip on this. So the PPP loan, the employee retention credit, and the deferral of the employment taxes, these things are mutually exclusive. You have to pick one, okay? So for most small businesses, it's probably going to be the PPP, you know, just because it is easier and simpler, and you just got to follow the rules. It can get forgiven, and especially who the employee retention credit I think will work especially good for are the companies that were really hard hit that have lots and lots of employees that aren't highly compensated, right? Because it's only eligible up to $10,000 of compensation. So if you have a bunch of lower compensated employees that you still paid, but you had to shut down then you may get upwards of, you know, now again, nobody gets paid only $10,000 a year, but hopefully they're only laid off for half the year. So maybe you'll get upwards of 25 to 40% of what you paid your employees as a credit back, right? For places that have like service industries with lower paid workers, So this could be really important. I'd say for a lot of our audience, it's probably not the main thing. If you are a bigger company that has that, you probably have multiple accountants in they're going to help you figure it out. We just want you to know.
Yeah, there's a lot of details in here that you're going to have to be careful of. So, you know, make sure you go through this thoroughly.
Yeah. And then the last one we're going to talk about is delay in deposit of employment taxes. This is the first one they talked about. And the main thing we just want to say here is it's probably a horrible option for most people. It's complicated. You have to keep track of it for almost 2 years. It's not forgivable. It's just a 0% loan. So in the end, could it help some people? Was it an innovative idea when they came up with it? Yeah. Could it be an access to money that's just there that employers have to pay that we could be given back without the government having to like raise funds and figure out how to get it to people? Yes. But it's going to be difficult because when you think about it, it only applies to the employer portion of the FICA tax and not the Medicare. You can get the deferral from March to the end of this year, and then you have to pay half of it back at the end of 2021 and half of it back at the end of 2022. So, I mean, this is a huge thing to have to keep track of and how to do it. And I imagine so many people, unless, I mean, they have an awesome accounting and payroll department, they're going to mess it up, right? And it's not even forgivable, any part of it. So, generally, if you're smaller, you should be using the EIDL or the PPP. If you're bigger, the retention credit, if you can qualify, it's there. I would say as a last resort for bigger companies. And again, you are going to have attorneys and accountants and stuff to give you advice. And there are huge loans and grants and stuff going out to airlines and bigger companies. And so you have to be careful that minefield of using those benefits. But again, that's not what we're trying to talk about here. We're trying to talk about regular people out here running businesses and so.
Right. And you never want to get behind on taxes because once 2021, assuming we're back to normal, then you're going to owe those taxes
as well
as you're going
on. It's going to be a big liability.
It's never good to get that far behind with owing the government on taxes. So, no.
Or if you have some little payroll company helping you to start just withdrawing a little bit more and then they don't have to pay it to the end of the year the next year. I mean, I could see fraud from them dipping into that big pot of money they're saving up for you to pay to the government. So again, I think it is just kind of fraught with bad potential outcomes. So again, I hope this helped you. This was pretty long. We try to fly through it. Comment below, reach out to us if you need help. If you've got other advisors, reach out to them. There's lots of great information like we pulled up on the SBA's website to help people. Find a lender that can help you. Again, if you do qualify, especially for the payroll protection program, get the application in before this day is over. Otherwise, that money is going to be gone. Hopefully, they'll inject some more into there, but I imagine that's going to be gone by the end of next week because a lot of like single member like LLC and weren't even supposed to apply to the end of this week. So like you could see the money got sucked up from people that actually have a bunch of employees. When we get like independent contractors and stuff applying, come tomorrow, it's gonna flood. Yeah. So again, if you haven't gotten in and you need to get it in, or you could get left out. So again, hope this helps. Thanks for joining us. Stay healthy, stay safe. Hopefully, we'll see you next week.
We'll see you soon. Thanks.